Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, April 22nd with our pre-market morning strategy and briefing session. As always here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model. Our market trend model is based on the tick index, and then we add a time component so we can look at the overall trend of the market day over day. Currently, if you follow us for any amount of time, you'll know that we look at the bolded CT. This is basically our cumulative tick, which is this line right here. This is an indication of buyers versus sellers in the overall market aggregated throughout the day. And yesterday we saw a significant linear down look, which indicates that sellers are in major control of the overall market. And then buyers are basically just non-existent. Reference up here are breadth indicator, new highs versus new lows. The red obviously is new lows, indicating a significant amount of stocks are being sold versus accumulated via the green line. And this is our filtered cumulative tick indicator, plus 1,000, minus 1,000. This is basically just filtered for larger block orders or institutional orders and market participants. A significant move down yesterday in the filtered cumulative tick, indicating there was a large amount of selling via the institutional side or large players in the market. The past 3 or 4 days, basically, we had just oscillated around zero and we're flat, but we did see a major selling event yesterday. The colored ribbon, as you will reference here, is our longer term sentiment or a trend of the overall buying versus selling, and the red continues below the cyan line with expansion to the downside and negative slopes. So again, on a longer term time frame, weeks to month, we continue with an overall bearish stance and selling in the market. So what would we want to see if we wanted to see any bounce via the cumulative tick, indicating that buyers are starting to take control? We would need this bolded CT to start moving across these shorter term moving averages just for a reference. And they would need to start moving from lower left. The bolded CT would need to start moving from lower left to upper right, indicating that buyers are starting to take control, or at the least that sellers are exhausted within the overall market. And as you've seen really the past week, or you can even scroll back for us and review any of our X posts, when the bolded CT gets into the colored ribbon or up to the colored ribbon, we've seen historically now failures multiple days in a row, indicating that we have that 1 to 2 day short term seller exhaustion, buyer bounce, and then we see a quick failure and then a resume of the downside within the overall price action. So we'll continue to watch that to see if that is the status quo, and if the bolded CT comes up towards this colored ribbon or into the colored ribbon, and then again we see that quick failure as we've seen multiple times in the past. Or do we get a change in sentiment and the bolded CT starts actually emerging through the colored ribbon, indicating that we might have some sort of longer term sustainable bounce, possibly 3 to 5 days or 7 days. So moving on to the SPXA, this is our cruise ship. This is our longer term institutional expiries. The monthly here, you'll see the May 16th is our next expiry, but we continue to be put dominated as denoted here, and just overall up and down the net delta structure with these red boxes above and below spot price. You'll see that it is red net delta, indicating we are put dominated, as well as the net OI is put dominated. Implied open is 5,200. That is well below our expanded transition level, which means uncertainty, but implied open is opening into this severe put dominated area. So 5250 to the upside would be an area that we'd see first stalling if we do get over 5,200, and then 5,225, that quarter level. Obviously the SPXAs are not as liquid and do not turn over as fast. So these really will not be transacting in a major way at this time. So we move on to the SPXP. Obviously, these are shorter term expiries, dailies to weeklies to monthlies. So we like to look at this for our shorter term option structure. Again, put dominated is denoted over here by our gamma condition, and then indicating red negative net delta above and below spot price. Obviously indicated open is 5,200 here, implied open, but we do see this expanded transition zone by this white box here, indicating extreme uncertainty and just an overall structure that is put dominated in negative gamma environment. And then the net OI over here, again, a significant amount of in the money puts above us. So opening into this area, as we've seen historically the past few weeks, we've saw a gap up right into this negative net delta put dominated environment. We see some stalling, and then usually we see some sort of weakness and sell off back down to the downside. So we'll continue to watch that to see if we see a change in structure today or change in sentiment, or if we get the same trading plan as gapping into this overhead resistance put domination, and then we see stalling and then weakness begin to take over through the overall day. We'll move on to the 0DTE SPXP. Obviously, this is a single day expiry. This kind of sets the stage for the day for our daily flows. We are put dominated as we come into this morning. We do denote our implied open is 5,200. So again, referencing this significant negative net delta above in the money puts. And then the net OI here above us, it is slightly green, but obviously the negative net delta will override those in the money puts gapping up into that overhead area. So I would anticipate some sort of stalling at the open around 5,200, possibly 5,210. Transition is below us, so that can be supportive if we do see any pullback. We would need to hold that 51.75 level. If we start getting into transition, we'd indicate a significant, more choppy price action type day. And then we've referenced our drunken sailor range, where these are low exposure areas with elevated expected move here of 100 points. If you're in the drunken sailor range, you can have highly volatile moves back and forth and just get chopped around pretty significantly. So it is our thesis and game plan you usually hear at GammaEdge to trade where we have an edge. So an edge would be above 5,200. Or below the transition 51.25, 51.30, or below the drunken sailor range down there at 5,100. Within this overall 100-point structure, basically you should just get chopped up back and forth really with no edge. How do we find an edge intraday? We use our vol-m command. That is our volume assessment tool of what is happening with transactions across the option structure and where the majority of participants are transacting those options contracts. So if we do see a trend down day, most likely we'll see negative slopes. If we see a trend up day, we'll see positive slopes on our vol-m tool. So that's what we use to help determine directionality for intraday trading, and as well using these key gamma delta levels via our net stat command and a few other tools we have here at GammaEdge. So moving on to the GEX ratio, basically this is a put-call ratio where we add a time component, which is gamma. We did see a price appreciation with SPXP, but did not see the corresponding price appreciation with the GEX ratio. So basically this is still indicating put-dominated participants are still in control, put-dominated gamma. We did not see the overall bounce, this dotted red line. So if we do see price appreciation to the upside, you would want to see this dotted red line start moving above this 1, indicating that call out of the money calls are being opened, and that we are increasing our short dated call gamma and trying to override this significant amount of put gamma that we've been under. As you see the red line staying below the 1 line, indicating that put speculators are in control of the overall market. So we'll watch this day over day. It is flat right now, indicating there's really no change in the overall GEX ratio. So it's really a stalemate via call and put speculators at the moment. And obviously put speculators maintain control, being below 1. Moving on to delta balance for the SPXP, basically this is just indicating what is happening above and below spot price with market options positioning. If you're above the 0 line, this is indicating that call speculators can be starting to take control. If you're below the 0 line, you're indicating that put speculators are maintaining control. And then if you're transitioning with these lines crossing above or below 0, that indicates the planes or speculation is changing, and that's what we currently like to watch. So denoted that we did see a slight bounce in the delta balance here, indicating that the put speculation may be waning a little bit and the call speculation may be trying to increase. But you'll notice this right-hand plane really cannot even get above negative 0.5. That would be your call speculation, and that the put speculation is maintaining above 0. So put speculators maintaining control. And this is our projection on out in time through the week. So again, indicating weakness continuing with the delta balance and a right-hand plane of -1. So really call speculation is not coming in at all, even if we see a short-term bounce in the overall market. So we'll again continue to watch this day over day and see if we see any improvement. Moving on to the SPY, it actually looks slightly better than the SPXP with the overall bounce and the delta balance crossing above 0. So we do have some call speculation coming in there, or a closing of puts just exposing some of the calls to the upside. But again, just noting that right-hand plane is really not crossing above zero. So again, puts or call speculators are not coming out in mass to override the put speculation that you see here, increasing back up towards the 1 level. And then again, projected on out in time, we see dropping below zero for the delta balance in the right-hand plane. So this is call speculation staying in the negative state. So again, indicating that call speculators are not coming out in mass or not trying to exert force at all. QQQ, slightly better maybe on the bounce, but not much. And then indicating on out in time, we do drop below back zero. So indicating call speculation is still in control, and same kind of MO or thesis that put speculators are maintaining control and call speculators are not coming into the complex. So referencing our SPXP, these are highest sensitivity levels we'll be watching for today. Left-hand plane, if we do see any pullback towards that 5150, I referenced that transition level at 5175. Most important is that we stay above the transition. That would stay in some sort of positive look, or not even call dominated, but positive state of the overall market. We have in the money calls down there at 5150. If we do lose 5150, then we anticipate more weakness down towards 5100. Right hand plane strike is all the way up at 5280. Obviously this is the highest sensitivity level in the money puts, but noting that obviously we have a significant amount of in the money negative net delta in the money puts above us from 5200 all the way up to 5280. So pushing that large rock uphill, basically trying to overcome that negative net delta and net gamma is going to be a significant push or lift, trying to move to the upside. If we do see some out of the money call speculation, then obviously we could head up towards that 5250 level, but we'd have to stay above 5200 at the open. Moving on to the EM chart. Basically, this is our intraday minute chart. We've obviously forced spot price to 5,200 for the open. So pretty much you can see where this significant amount of sensitivity is going to be located at the open: 5,200, 5,205, and then basically on up to 5,220, and then we have 5,250 up here. So we already referenced those levels. And then to the downside, to be looking at that 51 kind of 74 level. We talked about transition there. So if we open spot price opens around here, we'd start looking for some sort of rejection of spot price here. And then if we move back down towards transition, obviously we'll be stuck within this overall choppy transition range. If we do stay above 5,200, pull back to there, this could be a possible supportive type area for a move back up towards 5,225 and then 5,250. But then I'd anticipate that we'd probably be capped within this 5,250 level. So we'd probably chop around between 5,200 and 5,250. So we'll watch the 0DT flow. We'll watch our volume command intraday. Move on to our trading view chart. Basically, I've outlined I've overlaid our trading view scripts for the day, indicating obviously 5,200 negative net GEX. It's going to be very important to stay above. This is projected open at the moment is 5212, and then we have our drunken sailor range and our DEX GEX transition. So we'll watch for a failure of 5200, dropping back down into this drunken sailor range, which was really no edge. Watch to hold DEX GEX, or if we get down in this transition area, again, it'll be a significant choppy area that we'd anticipate spot price to just get chopped around in. If we stay above 5,200 and hold there for the opening range, then obviously when we see the vol-m command in the positive slopes, then we could look for a move up towards 5,225. I'd be looking for this high to be taken out, and then up towards 5,250. As you can see, that'd be our COTMC level, where out of the money calls go in the money and anticipate some sort of monetization or profit taking into that level. And then obviously we have 5,265 overhead. So that's the thesis for the day. I hope to help everyone. A lot of stuff to cover this morning. Again, basically the takeaway is we're still in no man's land with an overall larger range. There's really nothing indicating that the market's transitioning to a supportive type move to the upside. This is just really short-term overall sine wave action that we talk about, where you see some put monetization, you see a bounce in the overall structure without out of the money call speculation, and you cannot maintain the overall move to the upside. And then we'll see if we see that put speculation come back in on a shorter term look, and then we'll drive price back to the downside. And we'll watch obviously our market trend model to see if buyers are trying to take control in a shorter term time frame, but longer term time frame sellers are in major control of the overall sentiment, structure, and trend. So with that, everybody have a great day, and we'll see you later. Thanks.